We're forecasting 4.5 billion TVL for next year, which would be about 15 million top line revenue. And we feel pretty confident around our ability to get there with the current AUM model that we have on our existing institutional pipeline. And then we have these like innovation projects that we're exploring where I prompt the team and we have discussions amongst each other, which is how do we get out of the fee business and how do we also bring in some like more SaaS-based revenue and think about multiples for tech companies.
Before we begin, I want to give a shout out to our new sponsor, SocialValue, an AI-powered investment research terminal with prop indices and a high-performing DEX on its own chain. Join its third research competition for a $100,000 prize pool by submitting on socialvalue.com or on BidClub.io, with an additional chance to win another $2,000 every 2 weeks. Good morning. Welcome to another episode of Bidcast. I'm your host, Jason Kam, aka at Maple Leaf Cap. Today is September 26th, 8 a.m. Hong Kong time. Bidcast is being live streamed BidClub members. Questions are from the members and my own. This is not financial advice. Today, I'm speaking with Bhaji, the CEO of Centrifuge. Bhaji, welcome.
Thank you so much for having me. It's a little time travel because today is currently September 25th, 5 p.m. for me in California.
Yeah, beautiful. Usually I don't do it this early, but the story is exciting, and I'm keen to talk to you before Token 2049, which I think you guys are doing a big roadshow and whatnot. We'll talk about it in a second, but a lot of exciting things are coming down the pipes there. But I think a lot of people aren't familiar or aren't even aware of the management transition that kind of happened. And also you guys now being at $1 billion TVL, which is kind of the largest RWA protocols out there. Maybe to start, why don't you just kind of walk us through like what happened with Lucas and you stepping up, like, what kind of just happened over the past year and a half?
Yeah, absolutely happy to. It's been quite an evolution and a lot of changes have happened with Centrifuge. Us being very early is both a great thing because everyone knows Centrifuge, but also a challenge because we've iterated and pivoted and done quite a lot over the last 8 years. So folks don't exactly know what we're doing today and they don't know how to categorize us within the RWA sector. So that's part of the reason I'm doing this roadshow, as we call it, and starting to talk to a lot of investors and just share all of this information firsthand. So thanks for having me and giving me the platform to do it with your community as well. Ultimately, Lucas he's still on our board. He's still an advisor for me, super close, but he was very early in RWAs. So 2017, before anyone was talking about it, thinking about it, before there were exchanges, before there were lending markets, before there were DEXs, before there was any DeFi on chain. So he was a very early visionary in what this industry could be and what this protocol could deliver. And through the course of many cycles and ups and downs, what he did was he built this incredible foundation of the tech that we now have that enables us to deliver the products and the roadmap that we have. And he realized that as the industry was evolving and as we were hitting product market fit for RWAs, the skill sets that were needed in the very, very early days are different than the skill sets that are needed today. So the skill sets needed today are growth and adoption and go-to-market and TradFi experience and a team that understands how to, for RWAs specifically, liaise between on-chain DeFi capital markets and traditional financial institutions and traditional capital markets. So what we say is like what got us here and the incredible work that Lucas and the team has done isn't what's going to get us there, and bringing RWAs and tokenization into the mainstream and really institutionalizing it and seeing the demand and the growth that we know is possible. So Lucas was very open about this recognition that we needed a different team to take Centrifuge to the next level. He worked very closely with me and the broader team to set me up for success stepping into the role. My background at Centrifuge, I joined early 2023 to do go-to-market, so really focused on category creation, legitimizing the industry as a whole, creating the Real World Asset Summit, the Tokenized Asset Coalition, so doing a lot of work for the kind of education and marketing needed around RWAs. So then it made sense for me to step into the CEO role and empower this incredible team that has deep technical expertise in all of the key areas that are important. So we have Anil, our chief strategy officer and chief growth officer, comes from Cantor Fitzgerald and an incredible experience and background in ETF market making. Jurgen, our chief operating officer, comes from Goldman Sachs and Invesco and BlackRock. And again, really deep experience in the ETF market making and
When did they
industry
join?
development.
Yeah.
Anil joined about a year ago. So he actually came in via Anemoy, which we can talk more about, which is a regulated asset manager that we spun up within the Centrifuge umbrella because we needed this vertically integrated business to onboard and do due diligence with TradFi. So he came in initially as a co-founder of Anemoy and then ultimately joined Centrifuge and joined me on the leadership team to align around CFG and align around Centrifuge and do what's needed for the growth of Centrifuge because Anemoy and Centrifuge are ultimately so deeply interconnected. So we realized like pretty early on, there's no Anemoy without Centrifuge, no Centrifuge without Anemoy. So let's just kill. There's no Anemoy equity. There's no independent business opportunity or revenue stream or incentives around Anemoy. It's all fully aligned around Centrifuge and around CFG. And that's actually
And then,
something that I think I need to do a better job of communicating externally. I don't think the market really realizes that is what's the relationship between Anemoy and Centrifuge and what's the like incentive alignment.
yeah.
And the short answer is like they're the same. The leadership, the entire team is the same, and there is no incentive misalignment because everyone is just incentivized via CFG. All value is accruing back to CFG.
Yeah, just so it's clear, the transition happened, like you stepped up, was it like early last year, middle last year, something like that? And that's also just when Neil joined, and that's all when a whole transition happened.
Yeah, so Anil joined like early last year. And then Lucas and I started talking about me stepping into the role like mid to late last year. And then as part of that, it was important for me that I was able to bring Anil in. I was able to surround myself with folks that have the deep experience in the areas that I myself don't. So a big part of the conversation before Lucas officially stepped out was how can we construct this team that is the winning team? And that was me and Anil spending a lot of time together talking about what that integration looks like and bringing him more involved on the tech side, on the Centrifuge side, because his background's asset management. So there was a lot of education and work and creative structuring that happened there. And then ultimately, like the change officially happened February this year, where Lucas stepped out.
Got it. Was there any
Yeah.
investor pressure that cost this also, or was it kind of a very top decision between you and him, basically?
I think just like investor pressure. Lucas, like he had just completed a fundraise. It was pretty challenging for him, but also at the same time, like knowing we had a good cash balance. So we closed $15 million Series A early last year. So he kind of like, I think that was the final piece that kind of burnt him out a little bit was doing the fundraise. Nobody specifically asked him to step down, but a lot of the conversations were like, you got to become more institutional. You got to start thinking about how to work with folks like BlackRock. Like the next real growth drivers are like everyone was pushing him in this direction where he's like, I don't know, does that really
fuck
feel
that.
right for me? Yeah,
Got
yeah,
it.
yeah,
Interesting.
exactly. Like, and me doing marketing before with him as the CEO, I'm like, Lucas, like you have to go to DOS too, and like
Yeah.
these, coin alts and like these, traditional like boring suits events, not just DevConnect and ETHCC. And he's like, but I don't like those. So like, I think it was it was just the right time, and it happened in a very harmonious and like collaborative way.
And he's very much involved still today, even though he's kind of sitting on board.
Yeah. He he likes it. It's so close to his heart, and him and I have a great relationship.
And since then, you kind of won over Janus and Apollo. I know they were kind of talking about this because Apollo kind of already did it with Camino, but like, was that a multi-year courting process, or did they kind of jumped in after Trump? How did that kind of all unfolded?
It was a multi-step courting process, not multi-year. Step one was that one of the challenges Centrifuge has had with growth in the past is that we like we just didn't accept the fact that asset managers and institutions aren't ready to interact directly with blockchain. So we built this beautiful product and it has all these incredible features, but like nobody has the team or the process or the resources or the risk appetite to actually build directly on Centrifuge. So we had Block Tower Credit and we had New Silver and we had some early adopters, but a Janus, for instance, like their legal teams are never going to get comfortable with a DAO and a protocol. So by creating Anemoy, which is our vertically integrated fund manager, we're able to create professional funds out of BVIs, and we're able to bring asset managers in as a sub-advisor. So that was the first key step, is that Janus Henderson needs a counterparty that they're going through all this due diligence with. So with Anemoy, then they're able to say, okay, I trust these guys. This is a legitimate business. We can run through our existing approval processes, and then they're focused on what they're best at, and we're focused on what we're best at. So how it works with the current structure is that we do all of the on-chain and they do all of the off-chain. So we do the tokenization, we create the fund shares, we do the DeFi integrations, we do the distribution conversations with stable coins and with a lot of the existing DeFi protocols that want RWA. And then Janus does all the off-chain stuff. So they'll buy and sell and custody the T-bills, and they'll put their portfolio managers on these funds so that the portfolio managers are just getting orders, and some are from the tokenized fund and some are from the traditional fund. So that was a key point that we needed to have, was that on-ramp. And then the second key point was just like up-leveling our bench on the TradFi side. So Anil knows the folks over at Janus and was able to just knock on their door and say, hey guys, like I've got a great product for you. It's time to work together. So one of the challenges we had in the early days was like trying to get in the door cold is just impossible. It's such an insider's game. So you need to have the right relationships and then have the right path for them to get comfortable. And then the final piece was that Janus they had a blockchain readiness team and strategy for many, many years. And they have been focused on blockchain, trying to figure out how to use blockchain, but they didn't ever have a strong enough demand driver until the Sky Grand Prix RFP. So when they saw the $1 billion price tag, that was finally when they were able to say, this is the time where we take the leap. We put all our eggs into this basket. We tokenize this fund. It's very low risk because Anemoy and Centrifuge are managing it, and there's high upside. So that was what got them over the edge of why now for tokenization. And then we worked with them. We got the fund rated by Moody's and S&P, and we put a lot of pieces in place. And then we ultimately were a winner of the Grand Prix. And then from there, they were able to say, okay, we tested this proof of concept. It worked well. Now let's really grow and drive that strategy throughout the broader halls of Janus.
Yeah. And then I'm sorry to cut you off. And then I suppose another piece, aside from Neil, was also Jürgen Bloomberg. He kind of served a similar role in managing the fund, but also opening doors in TradFi, I'm guessing.
Exactly, yeah. So Anil on the ETF side was more on the investor side and market making side, and then Jürgen is more on the issuance and operations side. So now we have both sides buy and sell for ETFs. They both have incredible relationships, and bringing Anil in first made a lot of sense because it's how do we drum up demand and how do we build out the pipeline on chain? And then bringing in Jürgen is, okay, now how do we support that on the sell side with a great pipeline of institutional clients and funds? So it's usually been the inverse on chain for RWAs, where you like start with assets and you try to raise the money. And we've seen with a lot of projects that just doesn't work. And then you launch a fund and there's no demand. We flip that, where it's like, let's start with the demand. Let's find where the buyers are, and then let's build from there.
So this is a good segue, actually. I do want to talk about this. you kind of gave me the detail, kind of the basics of how this whole thing works, which is Janus is a product, right? And then somehow it gets tokenized. It would appear to me, at least, that like a 3 to 4 to 5% yield in the crypto DeFi world doesn't seem all that appealing, for instance, to all the degenerates or even kind of large institutionals. So for something to be tokenized on chain, I'm assuming there's a buyer on the other side. So and it seems like you mentioned, Jürgen, is pretty important in sourcing the buyers. Maybe walk me through kind of the steps in bring, like, let's say Apollo or Janus or any other new company has a product that they want to tokenize. Maybe can you just like kind of walk me through the steps on just how you do this whole thing, if you can?
Yeah, sure. And just one clarification is that
Yeah.
there's quite a spectrum of tokenization. A lot of the existing tokenization platforms, I think what you mentioned, they just wrap an existing off-chain product. So Janus has a product, and then we wrap a version of that and distribute it on chain. We have an on-chain native tokenization approach where rather than wrapping an ETF, which is just a wrapper of a wrapper, we actually build the ETF on chain. So for Janus, for instance, for JAAA, that's their flagship 40 Act ETF based in the US. It has 25 billion AUM, AAA rated CLOs. We have the same portfolio managers who run the 40 Act fund are running the tokenized version of that fund. And the tokenized version of that fund actually buys the underlying CLOs. So it's the same construct of the off-chain one. And they're just two different. And it sits in Anemoy, yeah. So in Anemoy, you can see all the underlying CLOs. You can see every asset that makes up what the overall fund is on chain.
Got it. So Anemoy is like the asset manager in this case that basically manages a portion of the JAAA fund that is basically Janus has. And then the buyer of that fund through a tokenized format are effectively subscribing to Anemoy. Is that the right way to think about this?
Yeah. So they do the onboarding with Anemoy, so they can find the funds in the Centrifuge app, and then they say they want to subscribe, and then they go through our fund admin via Anemoy. So they have to do full KYC, full onboarding. But then what that means is that they are the owners of fund shares. So they have full legal recourse. They have direct access to the underlying. They can redeem in kind. So they get the same legal protections as someone would in a traditional off-chain fund.
Yeah, and the only difference here is that they own it in a token format if they want.
Yeah, they own it in a token format.
And
so then to you,
go ahead.
Yeah. So I was going to answer your original question, unless you have a clarification question on that.
No, please.
So then to your point around where's the demand, there's a few categories. The primary demand driver to date is still stablecoins. So as stablecoins grew, you saw a pretty direct correlation with the growth of tokenized money market funds, because a lot of these stablecoins, yield-bearing stablecoins, they're focused on growth and distribution, and they're not focused on fund management and having the infrastructure and team in place to buy and sell and hold T-bills. Not the most complicated thing, but it's a different workflow than the distribution and growth of these stablecoins. So a lot of these yield-bearing stablecoins and even infrastructure stablecoins like an M0 and a Agora, what they do is they work with tokenized money market funds to manage all of their reserve and to provide the yield that they then pass back to their users. So as the yield-bearing stablecoins grew, the demand for tokenized money market funds grew. That was when the rates were pretty strong. So as we see the rates start going down, there'll likely be a shift out of T-bills for, like potentially JAAA, which is a couple hundred basis points above SOFR. So slightly higher yielding, but still very highly liquid products are what's required for stablecoins. That being said, there's, with Genius and some of the new stablecoin regulation, will always be a strong pull for T-bills and tokenized money market funds, because that's what's required for building compliant stablecoins. So that has now kind of been established as a very strong product market fit for RWAs, specifically within a stablecoin category.
So if just so I understand it correctly, it's basically the operator of the stable coins who needed the yield that are subscribing to your products that are on chain, because that is the easiest way for them to basically, without opening a bank account and owning T-bills themselves, to get the yield that is effectively T-bills.
Exactly. Yeah.
Hmm.
And like
Go
Sky
ahead.
was the biggest, Sky was the earliest adopter and the biggest driver of that. So the whole,
I see.
like they previously had a couple groups that were running their T-bill, their collateral management, and they were buying T-bills off chain and running it fully off chain. And then the origin of doing the tokenization Grand Prix was because they want to be fully on chain native. So then now Sky doesn't manage any of their reserves off chain. They do it all via tokenization platforms.
I see. And then with the fund that Animal runs, that effectively you created the on-chain tokenized format of the LP shares effectively. When the interests are paid out, you basically are in charge of the on-ramping into USDC or USDT that you pay to the counterparty that owns these LP shares tokenized. Is that correct? Like basically when the yield gets paid, you pay, Sky in USDT, USDT.
Yeah, so we have yield accumulating tokens is just the
Okay.
structure we have. So then whenever they cash out, then they get the difference.
Got it. And they cash out to
So
you. They basically sell
they
it
would
back to
cash
you.
out to us. Yeah, so they subscribe and redeem through us. And
Got it.
then we
And
would, when they subscribe, we take the cash, we take the
mm,
USDC and buy the T-bills and then give them the token JTRSY. When they redeem, they give us JTRSY, we give them the value in USDC.
and is that automatic, or do they have to like call you up? Do they just send it
It's
back
auto
in and they get? Okay,
it's automatic. Yeah.
got it,
Yeah,
got it.
yeah.
And can they?
The
Yeah, go
initial
ahead.
onboarding process when they first do KYC is slightly more cumbersome. It's manual, it goes through our fund admin. It can take a day or two. But then once they're KYC'd, then investing, redeeming can be done whenever they want and any size they want.
And it's on a Centrifuge dashboard.
Hmm.
Got it. And it basically through a whitelisted wallet that they provide you that is tied to that KYB account, and they just do it themselves.
Exactly.
And can they transfer that kind of LP share token that you issue to them?
They cannot. There's no transfer for the professional fund shares. So that leads me to my next point, which is that another blocker and inhibitor of Centrifuge's growth in the early days was that it's all fully KYC, all professional funds, and there's no transferability. There's very limited utility within DeFi. So that was a blocker of these products to grow and be used in wallets and exchanges and lending markets. So then we created a product called DE RWA, which takes these fund shares, wraps them in an ERC20 wrapper, and makes them freely transferable across DeFi. So we launched on Base, we're live on Solana, we're launching on Stellar. We're able to then take these products and say, where's an ecosystem that either has a thriving DeFi ecosystem or is building one that we can bring these RWAs in from day one. So then for Solana, for instance, that was launching on Radium, available for borrowing and lending and borrowing in Camino, available for Lulo savings yields, like, accessible for Perina and just available for all of these different DeFi protocols that need smaller sizes, need deeper liquidity, need instant trading, and can't or don't want to KYC on every single transaction or on every single new guy. So that was a big
And
unlock then for DeFi distribution and for retail exposure to RWAs.
this is on the Janus and Apollo product, or this is something else that you have
It's
in
on
your
every
inventory?
product.
Okay. And you're the one that is wrapping it. It's like there's a portion within the fund that I guess Centrifuge purchased and then put it under an SPV and then wrap it and put it on chain. That is doesn't have to be KYC ML'd. Is that correct?
Yeah, so it's a Centrifuge, this new entity purchases it, the professional fund, then they wrap it. It's not permissionless, it's freely transferable, meaning that then an entity, they KYC on subscribe and redeem, but then it's freely tradable in secondary markets. So like, for instance, that entity is typically market makers, where then we'll wrap that token, and then a market maker comes to us, they buy the wrapped version, and then they do the
Yeah.
liquidity pair on dexes.
Got it. It's legal, I'm guessing, or it's like a gray area.
It is legal, yeah. It's a security token. So it's just available for non-US investors. So it's exempt.
But I guess on Radium, no one would know if it's the buyer or seller would be US or not, right?
It geo blocks it. So nobody from the US on the UI, nobody can access it from the US.
I see. So the AMMs kind of designed a geo block when this kind of token shows up.
Exactly, yeah. And
Okay.
there's quite a lot of scenarios where tokens aren't available in the US or they're not available in certain geographies. So that's pretty standard for them. They didn't have to design it for us.
Yeah, I didn't know this is. When did this go live for Base and Solana?
Base went live 4 weeks ago. Solana
Wow.
went live last week or 2 weeks ago.
Wow.
Yeah.
I didn't know. This is cool. And the structure.
Yeah, like there were many things over the last 8 years that blocked our growth. And all of those things we're slowly figuring out, like, okay, we need to build Anemoy so we can on-ramp institutions. We need to build DRWA so we can distribute in DeFi. We need to, step by step, unblock all of these growth drivers so that we can reach our potential.
I have so many questions around this. But just to be very clear, there are, at least in my mind, two ways at which these instruments would get collateralized and traded very aggressively. The first way is you have this globally shared whitelist with all of these RWA players, where, for instance, on Horizon with Aave, your collateral would become somewhat kind of, you can just deposit, right? Even though, and these assets would be tradable and transferable, similar to how Superstate implements it across this KYC/ML ring fence. And you can deposit, you can layer, and that's one way. The second way is, assuming the SEC or the US is kind of okay with this, you have a third party kind of KYC/ML with you already, but they wrap it themselves on this, like outside world of DeFi, providing some geofencing against the US, and that's kind of where it seems like the second way is really unlocked today, whereby the first way is kind of still being figured out. Am I sort of categorizing it the right way?
Yeah, and we were the first that I know of that has done that structure. Our GC, we've spent a lot of time trying to figure out the right approach where we can do it in a way that is legal, that we can get on board with. Because we've always been slow because we've always been safe. And we believe that's why we were able to win Janus and these big institutional partners. So we don't ever want to give up on that or, cut any corners. So we feel comfortable with the way in which we've structured this. It's similar to like how there's a stable coin that is the single counterparty to these tokenized funds, and then they have their own distribution, and then the fund recognizes that they did the KYB, did the KYC on that stable coin.
Okay, that's interesting. Because the next question becomes, what else can you implement and what else can you tokenize? And there's like all the other questions about growth, but I'll go into that in a second. Maybe on $1 billion TVL you have today, like, can you just talk me through what it means in terms of revenue to Centrifuge, the company or the token?
Yeah. So we just turned on the fee switch. Congrats. By design, thank you. We hadn't ever charged on our past. So like we never charged on Block Tower. We didn't charge on any of the early funds because we were just focused on early growth. We feel now there's a strong enough pull, strong enough demand, strong enough recognition of the value of the space. And of course, like the maturity of our business where we need to start building towards fundamentals. We need to start generating revenue. So we made that switch last quarter. The JAAA allocation just went live a couple months ago. So on that, our top line fees are 50 basis points. On JTRSY, our top line fees are 25 basis points. So revenue model for Centrifuge is all AUM based right now. Apollo, for instance, is 50 basis points. So it ranges from like T-bills, which are the most commoditized and most competitive, on the low end of 25. And then for some private credit products, we'll go up to 50. And then from there, we have, some, in some cases, rebates back to allocators. We share some of that fee with Janus Henderson, who's doing all the work off chain. And then ultimately are now in a position where we're starting to think about how do we invest in growth? How do we think about buybacks? How do we ensure that the revenue that we're generating is accruing value back to CFG token holders?
Yeah. So it's like a 2.5 to 5 million run rate ish revenue to Centrifuge the box. Okay. And I don't know if you can answer this, but like, is there a run rate expense that you can disclose on the business today?
Yeah. So we have we have runway until assuming that we're doing 25% of our pretty conservative revenue goals, our profitability line is Q3 2027. So we have a path to profitability. Assuming no revenue, our runway gets us to like end of 2026, December 2026.
Got it.
So in the very bear case scenario, we've got like a year and a half, and then in a pretty conservative scenario with revenue planning, then we have a path to profitability.
Got it. Or maybe to ask this another way, which is what kind of TVL or AUM do you have to get to make you feel pretty comfortable with the kind of long-term sustainability of the business? SS.
Yes. We're forecasting 4.5 billion TVL for next year, which would be about 15 million top line revenue. And we feel pretty confident around our ability to get there with the current AUM model that we have on our existing institutional pipeline. And then we have these like innovation projects that we're exploring where I prompt the team, we have discussions amongst each other, which is, how do we get out of the fee business, and how do we also bring in some like more SaaS-based revenue and think about multiples for tech companies? So right now it is all purely asset management run, but we're having a lot of conversations around different ways that we can scale the white label product and different ways that we can scale revenue through different channels as well. But that 4.5 billion TVL and 15 million estimated revenue, that's just based on the current institutional pipeline and just the AUM based revenue. So even in that way, we wanted to be pretty conservative in our estimating.
And 4.5 is year end next year?
Year end next year, yeah.
Got it. On the 4.5, should we think of it almost entirely made up of fixed income products?
We should think of it as a diversified basket of really great products. So, I mean, we have T-bills, we have CLOs, but now we launched Apollo, so that's private credit. I don't know if you saw today, we launched the S&P 500. Probably not, because you just woke up. So now we have equities, private credit, fixed income. We are, to answer an earlier question you made, like what comes first, the supplier demand, we are building backwards from where we're seeing demand. So we started working, we brought JAAA on chain because that was something that Sky wanted, and they wanted an exposure to CLOs. So then we went back to Janus and we said, we've lined up this opportunity for you. We started working with Christine at Apollo because that's something that Grove wanted, where they want better yielding credit products for leveraged looping strategies and creative strategies on Morpho. We
Oh, interesting.
are looking at our next products for that use case in mind. So there's quite a strong pull now for, especially now that we have DRWA, for how do we build products that are in like the 8 to 12% yield range that have liquidity, that can be used in these lending protocols for leveraged looping so that they can get up to pretty compelling yields with a safer risk profile than a lot of the more volatile DeFi strategies. So then in that way, we're working with a few select partners that are asking us to then go out and source that supply and bring those products to market next.
Oh, interesting.
Yeah.
And all of these products, aside from the, I guess, equity index, are all kind of auto compounding tokens. Like they don't pay out the yield; they kind of auto compound. Interesting. That's kind of exciting. I guess this is and sorry, and the last thing on that, is there equity to Centrifuge, or is it purely a token business?
It's purely a token.
Okay.
So that's
Okay, good.
one thing. It's purely a token. I'm gonna start being more open about that, talking about that more, because I think there is that confusion. So there's no Anemoy equity, there's no Centrifuge equity, there's only CFG token.
Got it. And then it would obviously make sense over time as the business become long-term viable, to potentially return capital in the forms of value accrual to the token, assuming all things go well. That's kind of the goal of you down the road.
Yeah, I think the way we would do that is through buyback and burn mechanisms, which we've seen perform really well with a lot of other DeFi protocols. So that's what we're pretty actively looking at, and finding that threshold of what revenue and what growth and operating expenses, thresholds make most sense to start implementing that program.
Interesting. And is it fair to say of the 4.5 that you kind of have set your sight on, that you feel confident about, will all be through kind of this Anemoy as a fund manager tokenized format, or is it going to be a slightly different way at which you implement it?
We have two paths for issuance. One, or I guess I should say three. One is through Anemoy. Anemoy is more services and ops heavy, so we're more selective with who we bring on, and we want to make sure that who we bring on, we feel very confident that we can actually help connect into DeFi and drive growth for. But we really don't want to we don't want to grow the ops team, significantly on the Anemoy side to just tokenize funds that there's no demand for. So we're very selective with who we bring in via Anemoy. And then we have folks who want to build directly on Centrifuge. So that would be like the next block tower that has a, private credit fund, an on-chain native private credit fund. They want to build directly on Centrifuge. They want to use the Centrifuge tech and our app and our platform. And then the third channel is a fully white labeled product with an SDK that will allow them to build any custom app on top of the Centrifuge tech. So if they want to build a vault or a yield aggregator or a origination platform, and they want to fully white label Centrifuge under the hood so that they get the benefit of our audited and tested and tried and true platform, and they can get to market faster and they don't have to hire as big of an engineering team, that's one of those like X factors of growth where we see a pretty strong driver and opportunity for that to become a very strong funnel for us.
So let's talk about, we touched on a couple things because it's a good basis to sort of come off of, which is you have a guidance and kind of a target of 4.5, which you feel pretty good about. To put it another way, there are some X factors that could obviously introduce optionality. Is there a revenue number or a TVL AUM number that would make you quite happy, by this time next year or end of next year, that you feel like doesn't seem like a stretch target, but you can still kind of hit it? And what would be sort of the one or two most exciting opportunities that, gives you that upside beyond what you already have?
Yeah, I mean, the target I'm setting for the team is that 4.5, just so that everyone aligns around the current business today. And I think if we hit that, we'll be in, the lead of RWAs and if we're at the 15 million ARR, like the lead of revenue generating DeFi protocols, just generally.
Yes.
Where I think there's interesting avenues to explore. One is the white label product. So then some of the KPIs there are like, let's focus on adoption and interesting use cases and like modularity of the product that we're building. Let's think about the extensions that we've developed in every scenario. So there's, do you want to make this permissionless? Do you want to make it permission? Do you want to have multiple levels in the cap stack? Do you like all these different functionalities? Prompting the team there of like, how do we build for what customers need today, but then also help guide them towards where we believe the on-chain industry is going. So back to my point around a lot of like tokenization platforms just being wrapped versions of ETFs, we believe it should be fully on-chain. So how do we help drive the industry in that direction?
It's a little abstract, by the way. Can you give me an example of like after you built it, like what would be like an example of a really big product that comes out of it?
So one example, for instance, is that we're working with Plume, and Plume is using the Centrifuge SDK for their Nest product. So they have a vaults product where they'll allocate to a variety of different assets, and then the tech that they're using will be Centrifuge under the hood. So that's fully white labeled, and then they can then create any sort of customized features that they want on top of the Centrifuge tech. So that's one example. Another example is like a group who is building a specific product for Superform, and they want to use the Centrifuge product to tokenize the assets, and then they're distributing it through the Superform interface. So in that way, they're just using the tokenization component. So when I say like modularity, there's the Vault product where we have integration of different token standards, and you can allocate to different assets, whether they're RWAs or crypto natives. And then we have the tokenization layer, and then we have the distribution, like DeFi integration layers. So then if there's 15 things that you want to choose from and someone cares about 3 to build their custom product, we want to build it in a way that is fully customizable.
Interesting. How do you charge them? Like, let's say in the Plume's case, or
Yeah, it's a good question. Right now, we are charging on an AUM based model. So we just take a small portion of the AUM. We started that way because we want them to be able to use it up front and then build. And we want to like have as wide of breadth as we can. So we don't want a high hurdle. And then we grow with their success. So I think that's a good example of like something that we could switch over to SaaS and just have a recurring fee pretty easily. But right now we just wanted to do the fastest and easiest path to market.
Got it. And then in the sense of scope, it's like 5 pips, 10, like what's the sort of...
We start at 50.
Okay, nice. Got it. Okay.
And then another example is like the S&P 500 launched today. So there's 2 components of that partnership. There's what we call the proof of index product, which we built with S&P Dow Jones indices, where they gave us a license to their data feed. So then we're able to build this proof of index. We pull in the S&P data into the platform, and then any asset manager who wants to build any index tracked fund can then get that data directly on chain via Centrifuge, licensed from S&P. So our first fund is the S&P 500. It's managed by Janus Henderson, but that's another very strong potential growth driver is this index business. So we're talking to a lot of the major index providers who want to have an on-chain strategy. They want to make this data directly available on-chain, and they're talking to Centrifuge around how do we create the right licensing and fee modeling, and how do we bring asset managers in via Centrifuge, leveraging the data that's available through this proof of index product. So that one, again, is like, we're not charging for the index data because we're early and we're growing. So there's pretty strong potential upside for that as well.
What would that manifest? Because it seems to be just an Oracle price feed of their index price at a very kind of high, like low latency. Like, would that translate into AUM to you in any given? Like, it's a little abstract to me to understand. If you can expand on that a little further.
Yeah, so there's AUM fees on the S&P 500 index fund itself, but for an asset manager who wants to track an index, then the index data from S&P would, like for the S&P 500, would be the specific allocation into every single 500 stock in the underlying portfolio. So then the fund on chain automatically tracks that data on chain. So the real future is like disintermediated asset management, where it's just a smart contract running these funds based on the index data that's on chain. But then that would just be a licensing fee. So like the S&P model right now is that they just charge licensing fees for access to this data on a daily basis.
Got it. And would you have any funds that, like, would a market maker kind of would basically the S&P index become a fund that is under your fund manager, and then a market maker would subscribe to it and put it on chain? Is that something that you're contemplating?
Yeah, that's what we have today. So that's live on the Centrifuge app.
Oh, okay. And that's
any non-US investor can go to can subscribe to the S&P 500 index fund right now.
On Base and Solana.
The S&P 500 for now is just on Base.
Got it. So I can look at the ticker and I can just, when was that live?
Today.
Nice.
Yeah.
Okay. I guess to ask it in a way, like, of the partners that you're talking to that wrap these things and put them on chain, is there a level, I don't know how I can ask this. Is this something that they're extremely excited about and feel like could be a huge fee stream for them? Like, do you feel like it's a top priority for them to like court you and make sure this is a success? Or is it like, how high of a priority do you think is it for them to like work with you on this thing?
Yeah. So there's two parts. One is investors into the professional fund. So they want to buy direct and they want to own those fund shares and they want direct access to the underlying. That's the Groves and the Skies and the Sparks and the large size buyers. And they are absolutely courting us because they all want RWA yields. So as they're thinking about either collateral management for a stable coin or as they're thinking about treasury diversification so that they allocate a portion of their treasury to RWAs so it's not all correlated, then they're looking towards T-bills. Now they're looking towards JAAA. They're looking towards private credit. They want a better treasury management strategy. And there's very strong and proven demand for that. For the wrapped version, so it's a Centrifuge entity that wraps it. And then it's market makers that subscribe to that Centrifuge entity. And where we're seeing the strongest demand right now, and this is where we've been focused on, is from lending markets that want to offer RWAs for leveraged looping. So the market makers are interested in coming to us if they believe that there's going to be a looping strat opportunity. And it doesn't have to be market makers. It could be like risk curators, and it could be a direct retail customer as well. So it's just someone who is willing to do that KYC on subscribe and redeem. So the demand we're seeing there is not proven yet for like an end user who's holding, $100 in their Phantom wallet. I think there's a use case there where we say, instead of just parking USDC, swap it into JAAA, and you'll get, yield on your idle stable coins. There's still more market education that needs to happen there. And long-term vision is that like, that's all just automated. So Phantom says, any USDC that's sitting in any of our wallets will automatically give you 5% yield on. And then in the background, they're just allocating that to JAAA and then they're passing that yield through.
Yeah.
So that's the kind of X factor that we're early on and we're testing out, but there is the proven demand in that B2B2C. So like the lending markets and the vault strategies where they want to have RWAs as the floor yield.
Because it seems like you have the groundwork laid out for you, right? It's now a matter of really sourcing the demand that should be there to just ramp up through market makers to your wrapper to kind of the TVL that you have. Um, can you give us some color on just what kind of partnerships you're thinking about to really distribute these products and get to your guidance faster?
Yeah, so we're having a lot of conversations on both the institutional side and the DeFi side, and both are critically important. Like I said, Centrifuge is nothing without Anemoy. Anemoy is nothing without Centrifuge. TradFi, we're ultimately building towards tokenization and blockchain being in the background of the financial system. But right now, like TradFi is doing it because they want to access this new capital source. They want to tap into this new on-chain liquidity. And then
Yes.
like DeFi is doing it because they want to have some RWA exposure for like baseline yields. So TradFi needs DeFi, DeFi needs TradFi. So the two groups of customers we're talking to, one on the institutional side, like there's folks that we are saying no to every single day. We're like not really doing any real estate stuff. We're not really doing any more esoteric assets where there's like duration and yield mismatch. We're not even doing some of the more like boring RWAs on the fixed income side because we want to ensure that what we actively are bringing on, we see that demand for and we can really drive that growth for. On the DeFi side, we're having a lot of conversations with every major stablecoin. There's like a lot of groups that are coming up that are trying to do the next Athena and have basis trading and have T-bills as part of that strategy. There's a lot of ecosystems, so like new chains that are being launched that are either payment chains or RWA chains, but they're trying to create really interesting DeFi utility and use case as a differentiator for their chain. So everyone's launching a chain and like we're in a lot of those conversations and the conversations are awesome because I just had one today. It's like, I was talking to a chain and they're like, come up with like 5 ideas for how we can have as big of an early impact as plasma. I'm like, okay, well, where do you want me to start there? And they're like, can we do like crazy DeFi stuff? Can we do like really interesting, unique, differentiated like payment solutions? So it's very, as we see the growth of chains increasing, we're also going to see the innovation increase because folks need to differentiate. So for us, that's a great conversation to be a part of because then we can think about how do we have the baseline yield layer as RWAs from day one. And then any app that's built within that ecosystem can automatically, and to your point earlier, like, permissionlessly, if there's some sort of like built-in KYC functionality, get access to all of these yield products. So thinking from the very early days of how we construct this incredible like DeFi app ecosystem that's all fully connected, and then this yield marketplace that brings great RWA products in is a really unique position to be in and further validation of another big decision we made in the new leadership regime of like moving off of Polkadot, not having our own parachain and being fully chain agnostic. So that was another big unlock for us where we are now live on 8 chains and we can launch on any EVM chain and we can fully and deeply integrate within the current liquidity ecosystems wherever they are. So that was another really important decision.
Yeah. To an extent, you're the only kind of out of the box, immediately live product that these companies can offer through either infrastructure or through their customers, right? Because it's like it's so easy to just KYB with you and then plug in a line of code and just like have the yield come live, than trying to set up bank accounts and kind of KYB with all these banks and kind of onboard the yield. And that's a huge Seems like a huge value proposition for all of these, potential customers.
Yeah, like a lot of DeFi, a lot of DAOs don't even have bank accounts. So
Yeah.
they just don't have a way to onboard to T-bills if they wanted to.
Interesting. So it's like two venues. It's like the supply of product side. Like a lot of people want to talk to you because there's like, oh my God, there's so much demand, potential demand that we can just like plug our products into. We'll all make fees. That's great. And then the customer side, that the demand side of these products seems to be coming from, like you said, the stable coin plus chains that are payment or sort of stable coin oriented that need something that's live immediately with the flexibility. That's kind of why you're talking about the SaaS opportunity that you have, because that's kind of what you offer them. What about when it comes to like hyper liquids of the world or phantoms of the world where they have millions of customers that could demand your is that a venue that you guys are working on, or if that's a priority at all?
Yeah, we're actively talking to them and everyone else as well. I think Perps is really interesting for, especially for S&P and for a lot of the RWA products. And having the only licensed S&P product is a good differentiator for us. So we're talking to them, we're talking to Phantom. Ultimately, our play is B to B to C. So we don't have a retail focused team in house. We don't want to compete against every other incredible app in DeFi right now. We don't want to play the incentives game because our token's been live since 2021, but rather talking to all these products that have incredible communities and distribution strategies has been where we've seen a disproportionate scale opportunity as well.
On the S&P index and maybe other indices like NASDAQ and whatnot, are you the only vendor that's offering this kind of solution, or can they also just go to S&P and license that themselves?
We are currently the only vendor. Yeah. It took us like 8 months of onboarding and negotiations with the S&P team.
So hypothetically, what's the roadblock of, let's say, some top perp dex to implement what you have and just offer it to its customers tomorrow? Like, how fast do you think they can get it live?
what we have,
Yes, like if I want to trade, I don't know, like a S&P levered 10x long on, I don't know, like Aster or something, for example. Like
yeah.
what's a roadblock?
Well, we're all in Singapore next week. Let's schedule a meeting and see how quickly we can get it done.
Okay, well, like, hey, perp dex is like, take note here. Interesting.
Yeah,
Okay.
yeah, yeah. Exactly.
Okay.
We're
Okay.
very, very eager. We're very excited about perps. We think that's a potential additional huge revenue driver for us and opportunity for RWAs. So we're actively talking to all the perps products and figuring out how we best work together. We were actually just talking about Aster today and like what's next and where we want to be.
How aside from indices, is it easy to offer other kind of equity like products through your infrastructure to all the business vendors that you could be interested?
It is easy. Our current tech supports single stocks. Our current tech supports tokenization of any asset. We decided to go the indices route rather than single stocks or equities because that's just our strength. We have a team that's great in ETFs. Our product is built to be more on chain native and more sophisticated. And we have those relationships already. So we felt like we get to market faster on the index business and have a stronger lead there. It's also easier when we're thinking about working with market makers and providing liquidity and using this as a collateral use case to have one index token rather than 500 individual tokens. Ultimately, will every equity be tokenized? Yes, probably. And will we support single stocks as well as demand prevails? Yes. We just wanted to have a differentiated approach to what many are focused on in the industry right now.
Got it. So instead of like superstate tokenizing stocks on chain, like you're going through, it seems like the indices and the funds and the sort of credit and it is more of a priority for you at this moment.
Yeah. But Superstate's doing like they're doing company equity, and taking those companies' equity public on chain. So, and we can do that too. But what we what's more comparable is like what X stocks is doing with single
Yeah.
stocks on chain.
Yeah. Of the target that you have for the end of next year, would you say it's very heavily leaned towards the fixed income products? Like, I'm guessing like the X factor and the upside would really come through maybe from the indices and the perps and the sort of potential partnerships you have on the SaaS side through all of these stablecoin and layer twos. Is that the right way to categorize it?
That's the right way to categorize it. We expect continued steady growth from JAAA. We're not putting a lot of emphasis on into T-bills and JTRSY. We think that we have a lot of really good ideas and a strong pipeline for how to scale ACREDX pretty quickly, so the Apollo deal. But the index business is this huge opportunity, and our strength is in fund shares. And then what we're seeing is that like appetite for higher yielding products. So I think when liquidity, like a lot of these market makers can now support security tokens, so they'll start trading securities, and then that can start to actually start to work towards solving the issue around better liquidity for like an Apollo. Their underlying fund is currently quarterly redemptions. But if a market maker is able to trade in that time, then that opens up a lot more opportunities on chain. And they weren't ever comfortable with trading securities until pretty recently.
Yeah, and then just so I can have a sense of scope, because the 4.5, assuming it's very much credit heavy, and that already contributes to 15 million. In your mind, at least, like when you think about the SaaS opportunity or the index and the perp opportunity in like 1 to 2 years, what is the scope of the revenue for you in those two businesses combined, if you have a rough range at all?
We haven't fully mapped it out because it's so early.
Yeah.
We think we'll continue to see steady growth on the AUM business, and then the perps business is so new. The D RWA distribution business is so new. The indices business is so new. So we'll get like a few months under our belt and then start mapping out, more reasonable growth expectations for those, but wanted to keep the team like pretty focused on the core business for now.
And as for now, when it comes to offering this kind of 2P solutions that are like basically it's life out of the box, I'm guessing that's not what Ondo or Plume or all of these guys are kind of doing. You're kind of the only vendor in town doing something like this that is like immediately ready.
We are, yeah. Ondo, Plume, like purpose-built chains, really incredible use case. Plume is a great community distribution strategy. They're starting to do some vaults and distribution through their Nest product. Ondo, again, like chain, more focused on single stocks. So for us, I think a better comp would be Superstate. They have their T-bill product, they have their carry product, but their focus is more towards the equities side now. We come across Securitize quite a bit. They're also very similar. Their focus is more on the services side. So they acquired MG Stover and they're really building out these different services components, not really focused on the on-chain fund management and DeFi integration and distribution side. So we've carved out this very nice niche where we can speak the language of the institutions. We have this on-ramp for them. We can speak the language of on-chain capital. We have these great products for them. And then we can bridge those two with the infrastructure, but also the savviness that's needed to actually create a viable capital market that's on the intersection of TradFi and DeFi.
And you're dialing up token holder relations now, assuming with all what we've talked about, you finally feel comfortable and confident of the roadmap that you can deliver. And that's why with all the development that happened in the past 4 weeks, it's now a good time to really start talking to liquid investors about the story. Is that fair to say?
That's it. Yeah. The market just hasn't caught on. New leadership team, new institutional on-ramp, new distribution strategy, migration from Polkadot to EVM means fully EVM native, but also means that we have a centralized CFG token. We used to have the Polkadot token in a wrapped version. Now it's just one single ERC20. With that, we were just We actually just went live on Coinbase. New token was supported on Coinbase today. We went live on Bybit a few weeks ago. So we have all the pieces in place with institutions, distribution, team, infrastructure, and then token modeling. And then layering on top of that, turning on the fee switch, generating revenue, focusing on business fundamentals. This is all public information, but it's just not yet like put together in a narrative that I think is easy to grasp from the wider community. So one thing we've been focused on is how do we effectively tell this story? We did a dinner with some liquid funds. We're doing a lunch with some liquid funds in Singapore next week. If anyone on listening wants to join, we have a few spots left. And we're just doing exactly that. We're just telling this story. And then we'll start to tell it in more public forums as well. So one thing I want to do is start doing quarterly token holder calls where we have the same KPIs we report on. We have the same information that we share, and we're just working and operating more like a public company and operating in a very transparent way that gives everyone confidence around the value that we're creating for CFG and the work that we're doing to create more value accrual for the token today and in the long term.
Yeah, good answer. Before I hop off, I guess let me see if I have any questions. Is there anything we haven't covered yet that you think you want to talk about?
I think we covered a pretty good spectrum of things.
Yeah.
I have you're giving me some good homework on coming back with more real revenue forecasts and planning for our SaaS business and additional revenue streams. So we'll have to have a call in a couple months and I'll have some updates for you there.
Yeah. Last thing before we hop off, what about the DATs? Are you thinking about those at all at this juncture? Maybe later?
I don't think it's right for us. I think,
okay.
I mean, it's definitely interesting. I don't think it's right for Centrifuge.
Not at the moment.
But yeah, I mean, we're having some conversations with, HiveMind. Matt at HiveMind just launched the Avalanche DAT with Scaramucci. So we're talking about how can we help them grow the NAV of it through creative and more institutional strategies. So some allocation, some treasury diversification from the AVAX into RWA tokens. So we want to participate in the growth and the success of DATs, but a DAT for CFG. I mean, what do you think from the investor side?
Well, I think if you have an equity business that generates a ton of cash flow, you could kind of merge it into the DAT and then have it both be a treasury of a token, but also generates cash flow and maybe buy more CFG down the road. But it seems like it's too early for where you currently are. Maybe 1 to 2 years down the road. It would seem like. Interesting. Bhaji, thank you so much for your time. This is great.
Thank you, Jason. Really, really glad that you had me on, and hopefully this was helpful. And excited to see you next week in Singapore.
Yeah, see you next week.